Wow, the market is really, really showing some serious strength these days.
It is.
And, Micron Technology is definitely one of the companies that's catching my eye.
Right.
They're up over 6% just today,
Yeah,
which is pretty impressive, especially when, a lot of other companies are taking some pretty big hits.
absolutely.
We're seeing double-digit drops just in the past week,
Hmm.
which is kind of wild, right? But then you look at Micron, and they're up, what, like 8, maybe even 9% in the last week alone.
Yeah, that's a significant jump, especially in the current environment.
Definitely something worth paying attention to.
Exactly.
And I think what makes this even more interesting for anyone listening is the timing of Micron's, this resilience.
It is, isn't it?
Because we're getting ready for their next financial results, which,
Yeah.
those are coming out after the market closes this Thursday.
That's right. Thursday's the big day.
So we've done some digging, gathered some information on Micron to try and get a sense of, is this a good sign?
Yeah, is this upward trend, is it a signal of good things to come?
Is it a buying opportunity? Should we be jumping it? Those kinds of questions.
Right, exactly.
And so in this deep dive, we're going to really unpack all of that.
Yeah, let's break it down.
We're going to look at Micron's recent performance, the general market sentiment around them, their financials, their future prospects, all that good stuff.
I like it.
And we're going to do it all based on, this text collie we have here so you can see where all this insight is coming from.
Transparency is key.
Absolutely. Absolutely.
If we connect this to the bigger picture, what we're really trying to figure out is, are these positive signs we're seeing with Micron, are they backed up by solid fundamentals?
Yeah, are they for real?
Is there genuine potential there, long-term potential?
Yeah.
Or are there hidden risks that we need to be aware of, especially with these earnings coming out?
Yeah, that's the big question.
It is.
So let's just jump right in. All right, first things first, where's Micron at right now?
Okay, let's see.
Well, it looks like they're trading kind of towards the lower end of their 52-week range,
Interesting.
which sometimes, that can be a sign that a company is undervalued.
It can be.
But they've also had some pretty decent positive movement lately.
Yeah, you're right.
Like 10% increase year over year and a pretty solid 20% jump since the beginning of the year.
Those are some strong numbers.
It is, right? So that momentum, that's definitely something to keep in mind.
For sure, momentum can be a powerful indicator.
And then, if you zoom out a bit, look at their track record over the past decade, they've actually outperformed the S&P 500, like by significant margin, 21%.
Wow, that's impressive.
It is, right? So that history of strong performance, that definitely plays into how the market is viewing them right now.
Absolutely. Past performance can build a lot of confidence.
And speaking of market sentiment, Wall Street seems to be pretty optimistic about Micron.
Okay, what are they saying?
Well, our source mentions a double late chat recommendation.
Double A chat. That's pretty strong.
What does that usually mean in analyst speak?
So a double A chat, or double buy rating, it basically means the analysts are really, really confident that the stock is going to do well.
Like they're putting their money where their mouth is.
It's exactly. It's a strong conviction call.
And the average rating we're seeing, 4.48 out of 5, that kind of backs that up, right?
Yeah, that's close to a strong buy consensus.
Pretty much everyone agrees Micron's looking good.
Seems like it.
And then there's the dividend, which, it's modest, around 4%.
Right.
But still, for a growth-oriented stock like Micron, it's a nice little bonus.
A little something extra.
Yeah, exactly.
So we've got positive recent performance, optimistic analysts. What about the big institutional investors? What are they doing?
That's a great point because they often have a pretty informed perspective.
They do. They do.
And the data shows that institutions hold a lot, like a seriously large chunk of Micron shares, something like 81%.
81%. Wow, that's a significant stake.
It is, right. So what are they doing with all those shares?
Well, here's where it gets really interesting.
Okay, I'm intrigued.
Over the past year, institutions sold roughly $10 billion worth of Micron stock.
Uh-oh, that doesn't sound good.
On the surface, no, it doesn't.
That's a lot of selling pressure.
It is, but there's more to the story.
Okay, there's got to be.
Because during that same year, those same institutions actually bought 50% more Micron stock than they sold.
Hold on, so they sold a bunch, but then they bought even more.
Exactly. It's like they were rebalancing their portfolios, not abandoning the company.
So it's not a mass exodus, it's more like strategic maneuvering.
Right. And if we zoom in on the most recent quarter, their fiscal Q4 of 2024, the picture gets even clearer.
All right, what happened?
Their purchases were double the amount they sold.
Wow, so they've really doubled down.
It seems like they have a lot of confidence in Micron's future.
Yeah, that's a pretty powerful vote of confidence coming from these big players.
Absolutely, their actions speak louder than
I
words.
agree, I agree.
To understand why they might be so confident, we need to look at Micron's core business.
All right, let's do that.
They specialize in semiconductors, particularly memory and storage solutions.
Right, so the building blocks of a lot of modern technology.
Exactly, and this is a critical area in today's rapidly evolving tech landscape.
Definitely, definitely.
Now, one segment of their business is really standing out.
Okay, which one?
Their computer networking segment, they saw a 46% growth in just one quarter.
That's a huge jump.
It is, isn't it? It likely reflects the growing demand for, well, for high bandwidth and low latency memory and storage.
The kind of stuff you need for modern networking, right?
Exactly. Think about cloud computing, all the data traffic, the need for faster, more reliable networks. It's all contributing to that growth.
Makes sense. Makes sense.
And it's not just limited to one area.
No,
Micron's total revenue grew by 12%, so there's healthy growth across the board.
that's a good sign. And it's not just about revenue either, right? The source also mentions improvements in their profitability.
You're right. It's not just about bringing in more money. It's about making more profit.
Exactly.
Their gross margin went up by 3 percentage points, their operating margin increased by 5 points, and their net income saw a solid 10-point jump.
So they're getting more efficient, making more money on what they sell.
Exactly, which is a good sign for their long-term sustainability.
And all of this ties back to their strategic positioning, right?
Yes, it does.
They're involved in some really exciting, really high growth markets.
For sure, artificial intelligence, cloud computing, connected vehicles, these are all areas that are going to need a lot of memory and storage in the future.
And Micron is right there, ready to provide it.
They're well positioned to capitalize on these trends.
All right, so the business seems solid. Let's look at the numbers a bit closer.
Okay, what do we have?
So their price to earnings ratio, their PE, is 13.4,
Okay.
which, it's a bit higher than their 5-year average.
Is that a concern?
Something to consider, right?
Yeah.
It could mean the stock is getting a bit pricey.
It could, but we also need to look at the industry context.
What do you mean?
Well, Micron's PE of 13.4 is actually a significant discount compared to the average PE for the entire semiconductor sector, which is 21.
Oh, wow. So they're actually cheaper than their peers.
Relatively speaking, yes.
That's interesting, especially when you consider that impressive 84% year-over-year revenue growth they had last quarter.
Yeah, that kind of growth could justify a higher valuation.
It does suggest they're firing on all cylinders.
But there's a but.
There's always a but, isn't there?
There is, and this one is about their future projections.
Okay, what is it?
Their revenue guidance for the next quarter is about $7.9 billion.
And that's lower than what analysts were expecting, right?
It is, which is why we need to be cautious.
So what's the reason for this lower guidance?
Well, according to Micron's management, it's due to a slowdown in PC sales and some adjustments they're making to their inventory levels.
So basically, the demand for their products might be a bit softer in the near future?
It's possible these are cyclical factors that can impact the semiconductor industry.
Right. It's known for its ups and downs.
Exactly. And we saw this play out in their last earnings report.
What happened?
They beat EPS expectations. They reported a $1.79 come compared to the expected $1.75. But their stock price actually went down afterwards.
So even though they did better than expected, the market wasn't happy.
It shows how much emphasis investors put on future guidance.
They're looking ahead, not just at past performance.
Exactly. Any sign of slower growth can make them nervous.
Understandable. Understandable.
But even with this more cautious, short-term outlook, Micron's long-term growth projections are still pretty strong.
They are.
They are. The source mentions an anticipated revenue growth of 42% and a pretty amazing annual EPS growth rate of 38% over the next 3 to 5 years.
So if those projections come true, the short-term bumps might not matter so much.
They might be just blips on the radar.
All right, so let's put it all together.
Okay, big picture time.
Based on everything we've discussed, what's the verdict? Is this a buying opportunity?
It's a tough call, but the source leans towards cautious optimism.
Okay, what are the arguments for optimism?
Well, Micron's strategic positioning in those high-growth markets we talked about, their relatively attractive valuation compared to the rest of the industry, and the fact that big institutions are buying up their stock, those are all good signs.
They are.
And there's more. The source even provides a potential price target based on a DCF model.
What is it?
$120 per share.
Which would mean?
A potential upside of around 20% from where the stock is trading now.
That's a pretty good return.
It is, but of course, it's just a projection.
Right. Nothing's guaranteed in the market.
Exactly. So what's the final takeaway from the source?
Should we buy Micron before Thursday?
Their conclusion is achat avec prudence avant les résultats.
Which means.
Buy with caution before the results.
So there's potential, but there's also risk.
Exactly. It's a balanced perspective.
All right, so for everyone listening, the key takeaway here is this. Despite the uncertainties and the mixed signals in the short term, Micron seems to be operating in sectors with huge growth potential.
Right. They're in the right place at the right time,
And they've got the backing of some serious investors.
which is always a good sign.
It is. It is.
But this brings up a really important question for you, the listener. How do you balance the cyclical nature of the semiconductor industry with the potential for long-term growth?
Good question.
That's a tough one.
How do you weigh past performance against these short-term forecasts when you're trying to make a decision?
Because, whether you're thinking about investing or just understanding the market, it's a crucial question.
It is. It is.
And what about those other factors, the things that go beyond the numbers? What role might they play in Micron's long-term success?
Yeah, like the intangible stuff, the things you can't always quantify.
Exactly. Those can be just as important as the financials.
Food for thought.
Definitely something to ponder as you navigate this market.